Hello everyone, welcome to this week's weekly market view for Monday, the 29th of July, 2024 to Friday, the 2nd of August, 2024. My name is Vishal. Let's get started. All right, first up, we are going to start off with the Nifty, and we have the daily chart on the Nifty, and today we can see that the market has gapped up after a very strong move coming on the Friday's closing session. And usually when that happens, there is always this follow-up move that is happening. Now, what is key here is that we are approaching the 25,000 handle. So sooner or later, today or tomorrow, we are more likely to hit this 25,000. And right now on the price chart, that is where the highest open interest is. So usually people who have written 25,000 calls will not want the market to start moving up, because if the market starts to move up, then they will have to start closing their short positions. And if they all start closing their short positions, that will even fuel, or that will even propel more movement to the upside in the coming days. So what we need to watch out for this week is whether price takes a little bit of a resistance at 25,000, or price gives us a closing about 25,000. Any closing above the 25,000 level will probably induce more bullishness in the market, and the next level on the Nifty is 25,200, and if prices even move up further, the next level is 25,500. At this moment in time, things are looking bullish, but we'll have to wait and watch for this 25,000 level. Unless and until price closes above this 25,000 level on a closing basis, it is very difficult to say whether the markets are going to be extremely bullish and whether Nifty will continue its bull run to the upside. So we'll have to just wait and watch. On the downside, we have 24,500 odd levels and also 24,400 levels acting as strong support. Very far away from current market price now. But like I said, if this move on Friday, help price to move up in such a strong manner, there can be some profit booking also coming on the Nifty. So we'll have to wait and watch to see what the Nifty does in the coming week. Let's move on to the next index, Bank Nifty. Now, Bank Nifty has been slightly lagging, and although we had a little bit of a fall after the budget, we see that price did hold on to this level. There were these key open interest levels here. So currently, right now, we have 51,000 strike price open interest level having the highest support. So this is a level to watch out for. And if I draw my demand and supply zones here, this is more or less the price level from where the price has taken off. Now to the upside, we have something very interesting. So currently right now, we are in a daily supply zone. And if you notice just a few minutes back when I had taken you that we are also very close to that 25,000 Nifty handle. Now, it'll be very interesting to see this move on the Bank Nifty, whether this move on the Bank Nifty sustains. Because in case if the Nifty pushes up and pushes up very strongly and tries to give a closing about 25,000, then in the most likelihood, there is a possibility that Bank Nifty will also push to the upside, which means that this supply zone may not hold. And if price does move, then price is probably going to try and fill this gap. Now, what is more interesting to see over here is that although this is a valid level of supply and prices can fall from this area, the upper level also has a confluence of an open interest level, which is 53,000. So we do have 52,500 as we speak right now over here, but this is where the highest open interest is. So there is a possibility that the market participants will try to push the price to probably get better premiums for selling their calls at these levels. And then probably price might start retracing to the downside. As of now, as we speak, in the current scenario, prices are in supply. Not a great idea to go longs on the Bank Nifty. So just wait and watch for a potential price turn in the coming trading sessions. Let's move on to the Financial Nifty now. Very similar chart to the Bank Nifty. In fact, price did hold this level of demand. I'm going to draw this level of demand properly. So this was the level of demand, rally base rally. Price came into this level. And now just like how the Bank Nifty is entering the supply level, we also have the Finnifty, which is also entering a potential level of supply, which is this area of the rally-based drop. Again, same scenario, we have our 23,700 and 23,800 strike price open interest level within this area of supply. And we also have the highest open interest level at the upper level. So it's more likely that price may try to push up because of the Nifty movement. And this is where we will have to start potentially looking at shorts once the price gets into this area of support. On the demand zone side, we have 23,000 as a support level, and we also have 24,000 as the highest open interest resistance level. Let's move on to the next index, which is the MidCap Nifty. And the MidCap Nifty, I don't need to say anything much, but it is actually a beast, right? I mean, just look at how it moves once it takes off. And in fact, even today, if you look very, very carefully, it's probably the third or the fourth consecutive day where it has showing a very, very positive move. Now, there is no supply on the MidCap Nifty, okay, which means that price can continue to move up even towards these 13,000 levels. So as compared to the Bank Nifty, the Finnifty, and the Nifty, the MidCap Nifty looks the most bullish out of all the indexes. Okay, obviously we have to talk a little bit about Sensex and Bankex, but primarily in the overall NSE indices world, MidCap Nifty looks the most bullish index, to say so. Okay, so now what are we seeing as the major support and resistance levels on the MidCap Nifty? Based on the open interest levels, 12,800 is going to be acting as an immediate support, and to the upper side, 13,000 level is going to be acting as an immediate resistance. So we may expect the MidCap Nifty, and because today is the MidCap Nifty expiry, we may expect the MidCap Nifty to range between 12,800 odd levels to 13,000 odd levels. So now let's move on to the BSE indices. So let's talk a little bit about Sensex. And as we can see, the Sensex and the Nifty are more or less running hand in hand together. But again, if we look at the open interest levels, 81,000 is acting as the immediate support on Sensex, and 82,000 level is acting as a strong resistance on the Sensex. Again, no overhead supply, so prices are more or less trying to retest this broken resistance as support and trying to push further to the upside. Again, the same analysis in case if the Sensex does happen to give a breakout to the upside, 82,000 will act as an immediate resistance. If the prices does close above 82,000, then we might move on to 82,500 and then towards 83,500. So although things might look a little bit more bullish on the Sensex and on the Nifty, because we are coming closer to these open interest levels, we got to be a little careful, because whenever prices come towards these significant open interest levels, and also 82,000 being a round number, in the most likelihood, there will be some profit booking that will be coming. All right. So just keep a close watch on the Sensex for this week between 81,000 and 82,000 as the key level. Let's move on to Bankex now. So Bankex is also moving like Bank Nifty and Finnifty. We can call it more or less that it is slightly lagging as compared to the other indices. But again, on the Bankex index also, we are approaching a very, very key level of supply. And why this level is a key level of supply? Because it has a confluence of not just one, but three open interest levels. That is 60,000, 60,500, and 61,000. So seems like market may not be able to break these levels very easily, but even if it does, then any close above 61,000 will probably fuel even more movement in the Bankex. So let us wait and watch. Now today we also have the Bankex expiry along with the MidCap expiry. So we'll have to see how things get a little bit more interesting, maybe in the post-lunch session. So keep a close watch on this level of supply, 60,000 to 60,826. The closest level of support right now on Bankex is 59,000. And in case if price breaks 59,000, then 58,000 will be the next key support level on the Bankex. So we can probably look at this level of demand, which is also confluencing with the 58,000 handle. All right. So on a special request, what I'm going to be doing from this week onwards is a lot of people in the messages and the comment section on the YouTube channel indicated that we also include commodities in the weekly view. So I'm not going to talk about all the commodities, but there are some key commodities that I'm going to be talking about, which I keenly watch and keenly track on a day-to-day basis. So I'm just going to go over here now and I'm going to load the layout for commodities. And I'm hoping that somewhere or the other, this analysis proves more useful to you, since we are also now including the major commodities. So let me wait for the charts to load here. And once the charts load, then we will start talking about the commodities. All right. So as you see right now on my charts, I have the gold chart right now, and we had a pretty heavy selling in gold. And I've got these questions that, is it a good time to sell gold? Is it a good time to buy gold? And so on and so forth. So let us see what the charts are telling us. So if you look at the daily chart right now, we have created these very, very strong supply zones on gold. And I don't see these supply zones breaking in the near to short term, which means that in case if the price does get to these levels, it's more likely that the price is likely to move towards this area of supply, right? So in case if the price does this, then there's a possibility that we might fall down further. Now, whether the price will get there, it will get there eventually, but it probably may not get there in the short term. So what are some of the key levels right now? So that is what our open interest is going to tell us. And the beauty of our open interest support resistance tool within the Trade Tiger platform is it is not only showing us the open interest levels on the indices, stocks, commodities, but it is also showing us the open interest levels on the commodities as well, right? So you get to see the open interest level on commodities, you get to see the open interest level on stocks as well. And what is that indicating is that if we now move to a 240-minute chart, so today on gold, we have a gap up opening, but we also have this gap level over here. And although you may not see this level very, very clearly on the 240-minute chart, but if you slightly go to a smaller time frame, let's say to a 60-minute chart, and let's do that. Maybe a 30, maybe a 15. Yeah, so this gap is not very, very visible, but you know what I'm talking about. And let's go back to the 240-minute chart. And for me, I'm going to be keenly watching this this gap level over here, which is 70,000 to 70,097. First and foremost, 70,000 being a round number, right? So there is a possibility now that because gold has significantly corrected, there could be some short covering coming into gold, because obviously the institutions are going to book their profits on shorts, and that is going to probably propel the movement to the upside on gold. But in case if gold does come into this 70,000 handle, I will not be surprised if there is another strong sell-off to the downside on gold. And if that happens, then what are some of the key levels of demand to watch out on gold? We have these levels of demand, which is 65,791 to 65,155. So more or less right now, what I'm seeing is commodities are going to be a sell on any kind of a rally that comes into the market. But is it a good time to sell gold now? The answer is no. So we'll have to wait first till the price comes to the 70,000 handle. And we'll have to wait for some price action to form, maybe a supply zone. And then most probably we might see another round of shorting to the downside, which can probably bring gold back to these 66,000 to 67,000 odd levels. So keep a close watch on gold as a commodity. Now let's look at silver. So let's start off with the daily chart from silver. As compared to gold, silver is right into a level of demand. So without any doubt, I was expecting to see a bounce here. What is even more encouraging right now on silver is that we have a confluence of open interest levels lining up within this daily level of demand. So we have the 80,000 level, and currently we have the 81,000 level. Up to what point silver can give us a bounce? You can see over here there are multiple supply zones, and just like gold has fallen significantly, silver too has taken a beating to the downside. Once price gets here, I would be a little bit more careful on my longs because silver is still now indicating that it wants to go further down. We don't know at this moment in time whether the price is likely to turn from here and go down further, or maybe likely to turn from here and go down further, or likely to turn from here and go down further. But a bounce is quite imminent right now as we speak. So we'll have to go level by level to see what price action is telling us over here. In the immediate term, silver looks a little bit more bearish. So again, any rally into these supply zones can be shorted to expect a further down move on silver. And in case if this demand zone breaks, then I will not be surprised that the next level of demand on silver could be this level of demand. So keep a close watch on silver. Right now, metals or I would say the commodities are looking a little bit more bearish than bullish. Okay, and these are more or less corrective bounces, which should be ideally shorted since the impulse is now more to the downside. Let's move on to the next commodity now, which is copper. And copper, like silver and like gold, it has also taken a beating. But what is more interesting now on copper is we are coming into this daily level of demand. So now all these people who have shorted here are going to be more or less taking some profits. And if in case price comes to either this upper level or this lower level, we might see a strong bounce coming in copper. You can also see here that we have two significant open interest levels lining up, the 780 put strike price and the 770 put strike price, confluencing with this level of demand. So what I would expect in the coming days on copper, I would like to see copper either coming into this level of demand, probably consolidating, and then again moving up towards at least the 820 handle first, and then the next target for copper will be 850 odd levels. Let's move on to the next commodity. I think the most stock commodity of all is crude oil. So let's look at crude oil. And if I look at the crude oil daily chart, it's very clear to me that crude oil is in the middle of nowhere, right? So supply is at the top, demand is at the bottom, and crude oil is trading in the middle. So ideally, whenever such a thing happens, it's always good to probably just wait and watch, because the higher probability trades are going to be when the price comes to the higher time frame supply zone. So 6,800, 6,900 levels can be good levels to go short on crude. And in case if crude starts falling, then we have 60.73 to 59.49 as long levels. Again, we have confluence of this open interest over here. What is also interesting to know is just below this 6,400 level, we also have another level of crude. I'm not very keen on going long over here, but I will use this level to wait for crude to give me a bounce, which probably will take the price to the upside, and then this will be the bigger trade that will give me a much better reward to risk. All right, before we close now, I forgot to speak about the Nifty heavyweight. So let's round that up. So I'm going to go back to my weekly layout, and I'm going to talk a little bit about Reliance and HDFC Bank, because those are the stocks which will probably give us a much better indication on what is most likely to happen. Okay, so let's look at let's start off with Reliance first. And let us start off with the daily analysis of Reliance. So again on Reliance, just like the crude oil chart, this is where supply is and this is where demand is. right? So this is where we are. The next big move on the Nifty is going to be dictated by the move in Reliance and HDFC Bank. So we need to keep a close watch on this. If Reliance becomes more bullish and starts moving towards supply, it's more likely that Nifty is going to start moving up even more stronger. So keep a close watch on Reliance. We are expecting Reliance to remain in the range of 3,200 to 2,900 for this expiry, and probably even the next expiry. Obviously, in the next expiry, things will change once the rollover, etc. happens. But more or less, this is what we are seeing. So we are seeing a little bit of a wider range. 2908, 2869 is the closest level of demand on Reliance, and 3148 to 3213 is the closest supply on Reliance. So let us see what the price does, whether the price moves up strongly into the supply, or whether the price gets somewhere over here and somewhere around 3100 it begins to consolidate and remain sideways for the entire expiry. Let's now load the chart of HDFC Bank. Let's look at HDFC Bank. So I've been saying continuously since many days that we have now sold off in HDFC Bank. Now that HDFC Bank has come into this level of demand, and 1600 is acting as a very strong support. You can see that how the price has failed to close below 1600. So it has gone several times below 1600 levels, but it has not closed. So if you look at all the daily candles are indicating that price is closing above the 1600 levels. And this more or less price action more or less tells me one thing, that the last time when such a price action occurred, if you look at the historic charts, right? So if you look at this price action, and if you correlate the price action with what happened over here, this is exactly what happened when the price came into a level of demand. So when the price came into this level of demand, let me just mark it correctly here. Yeah. So when the price came into this level of demand, there was this consolidation, and then the markets took off in a very strong fashion. Now what can we expect? A similar consolidation. We are into a level of demand. So most likelihood, what it should ideally do, it should take off and at least move towards first the 1650 handle and then the 1700 handle. So let's keep a close watch on HDFC Bank. Not a good time to initiate any kind of bearish positions on HDFC Bank. Just wait and watch, because price is already reacting from the 1600 level. So we are more likely to move towards 1650 and 1700 in the coming days. All right, everyone. So this is it from me for this week. I hope you enjoyed the analysis and the new edition of including some of the major commodities. If you do like our analysis, do give your feedback in the comment section. And do let us know what you like about these sessions. I hope these sessions guide you in some way or the other in identifying some key levels on the chart. Take care, everyone. Have a fantastic trading week, and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.